Welcome to our Sunday live session, everybody. It's awesome to see so many people in here this Sunday. I'm very excited for this week. There's a ton of opportunities in the market, in my opinion, that should give us some good trading opportunities. If you guys are tuning in for your first time, you guys don't know me, my name is David Schinkel. I'm the owner and CEO and founder of Positive Traders. I hold this free Sunday webinar every single Sunday. I've been doing it for like 7 months, every single Sunday, religiously. I do about half an hour, 45 minutes of free analysis for you guys. I go over my opinions and views for the coming week. And if you guys like what you hear, you guys can join my free group. I have a Telegram. That's probably how most of you guys got in here. If you guys like the signals that you get in there, I do have a premium group where I give out about 5 times as many signals in the premium group. And then I also hold a daily live session. So aside from the free Sunday one, I do one Monday, Tuesday, Wednesday, and Thursday. They all get uploaded before the London session. So if you don't have time to watch them live, they get uploaded to your back office on our website, which is positivetraders.us, just www.positivetraders.us. So if you guys want more information, if you guys like what you hear, you like what you see on Telegram, all that good stuff, make sure you follow us on Facebook. We have all sorts of updates. Sometimes I give out free trade ideas on there that I don't on Telegram. So it's good to follow me on as many platforms as you can. But let's just jump right into things, guys. Of course, first thing I always do is I just quickly go over the economic calendar for the week. And as I mentioned before I started recording this, it is a pretty light week. You know, we've got a couple pieces of high impact news. If you guys haven't seen this economic calendar before, I highly recommend you guys have a little calendar. I keep like a little calendar. I go down to like Office Max every 6 months and get like a 6-month like planner. And I just jot down the high impact news. So like anything with a red folder, I just jot it down when it comes out, what it's for. And then I highlight it when it's done. But this week, you guys can see very light. It's not flooded with a ton of high impact news, meaning the market. All right, guys. So just back to what I was saying. I apologize if you guys are watching the recording. My computer just absolutely crashed, but you didn't miss anything too important. We were just jumping into gold, which is the first pair, and we looked at the economic calendar, which there isn't much going on except for Friday. That was extremely weird, and I apologize, guys. That has never happened before. But we're just going to roll with it. Let's just move on right past it. So I don't know what the last thing that you guys heard me say, but I was talking about how gold last week on Thursday rallied and then Friday gave back some of the gains. So I'm only interested in buying gold if it breaks new highs, but I'm not very interested in trading gold right now. It's very volatile. There's much better opportunities on other pairs right now. So let's move ahead. Dollar index, guys, huge fake out on the dollar index. And this is why I want to stay away from gold right now, because if we see the dollar continue to move up, which it looks like that's what price action is wanting to do, then we should see gold probably head lower, right? Remember, when there's a strong dollar, that's weak for gold. So sometimes it just takes gold for a little bit to catch up, or vice versa. So we're gonna wait to see. We always I don't trade on Sundays. We always let the markets unwind on Sundays. But if we do see price start to head up, then it looks like we probably are going to be making some new highs this week. And what does that mean for Euro USD? That means if the dollar index makes new highs, then the Euro USD is most likely going to make new lows, or not most likely, it will make new lows. They do the almost complete opposite of each other, okay? Now you guys can see I have an alert right here set up at 103.22. So TradingView will basically text me once price crosses 103.22, and that's when we're going to be looking for opportunities to short. But even if we can get some conviction with this daily, on Sunday's daily candle to the downside, then we will probably have a pretty bearish week for the euro dollar. Now, that all depends on today's price. That depends on where the next 24 hours of price goes. If it wants to continue heading lower and prove that last week's price push out of this zone or this structure was a fake out, or if it was the true move of a trend reversal. But we won't know that until the markets kind of unwind, the liquidity gets back into it, beginning probably around Monday morning. All right, same thing and For you guys observing where I'm drawing my different trend lines at, I don't really use trend lines a whole lot. I'm a big support and resistance guy. So when you guys are wondering like how I actually analyze the markets, I use price action and basic support and resistance. And then I also do keep in mind things like the SMAs and different fib levels. I'm not, I don't use fib levels on every single pair, but if we were to fib out something like this, right, you guys can see we had actually Friday's rejection, or I guess Thursday's candle close and Friday's rejection where it wasn't able to push higher at this key 50% level. All right, you guys know, if you guys have been trading with me for any amount of time, you guys know when I use fibs, all of them are respectful most of the time of price. However, my favorite one is the halfway point, the 50% fib level. So keeping that in mind, we could see some further downside on Euro USD. All right, USD chafe. Opposite of Euro USD, okay? If price wants to push higher, just like the dollar index, okay, USD chafe follows the dollar index for the most part, then we could be looking at getting some new highs. But we do have some fairly strong resistance up in this area. All right, now last week, what's kind of interesting, we actually formed an evening star, all right, right there. So I'm sure there were a lot of sellers, but last week, okay. Let me rephrase that. Okay, each one of these candles is the past 4 weeks. Okay, so the past 4 weeks created an evening star, and last week we got a doji. All right, which is indecision in the market. Okay, that's a neutral candle. It doesn't mean bullish or bearish, but seeing after such a bearish confirmation, such as this evening star right here, and we didn't see price just smash down. The buyers are still in control on this pair. So if buyers are still in control on this pair and they want to push price up, then expect a Euro USD to continue falling further. Pound dollar looks like it's going to drop a little bit further this week. I wouldn't be surprised if it did something like this week. All right. Now, I am not interested in trading pound dollar until support is broken. Okay. Very simple trade here, guys. Put a sell. You don't have to necessarily use a sell stop. Set an alert. If you guys don't know this platform that I'm using, this is TradingView. Okay, I don't actually trade off of this platform, but I do use it to mark up my charts. So keeping it very simple, guys, you could just right click a little bit below the low and you can put in insert. Oops, it's actually right there. Sorry, my little thing was in the way. Add alert. Pulls up this little screen right here. You have to go and set up in the settings. You have to put in like your phone number, your email. Simply click create. You can set up 2 for free. And now you guys can see I have an alert right here. It says alert when pound dollar crosses 121.82. So basically once it breaks new lows, that's going to, in my opinion, that's going to be the catalyst for price to push down further throughout the week. So look for support to be broken and then new lows to be made. All right, pound yen. We are staying away from pound yen until we break out of our zone. Okay, on the daily, we kind of did, this is what I've kind of been watching. We had this huge rally. All right, we came back, tested the 200 SMA, and right now we are just moving sideways in a choppy pattern. All right, now pound yen. Now the catalyst for pound yen is not the pound right now. It is the yen. All right, it is a weak yen that is going to push price up just the same as if USD JAPY continues higher. But if I just had to like flip a coin and guess which, and I do not take a trade based off me saying this. This is just for you guys to kind of like see why I would be biased, but I would be biased to the upside because there's been limited downside potential on this pair because support has been respected so many times. Okay. Now, if we can get a break below this green box, let me extend this green box a little bit. Then that would be our indicator to sell this pair, to short this pair medium term, meaning the next 2 to 4 weeks. All right, but we would have to break well below this 200 SMA that is right here, this red line, and we have to break below this previous support. Okay, this low right here that is made, and this low to form this double bottom, and actually right here for this triple bottom. All right, but I would not be surprised if we saw price continue moving higher, and even though some of you guys might be like, okay, why are you saying pound dollar going down, pound yen going up? Remember, the pound dollar going down because of dollar strength, okay? Pound yen going up because of yen weakness, okay? So both of them are having, they're both influencing those pairs more than the pound is influencing those pairs right now. In my opinion, at least. That's just what I'm experiencing in the markets. AUD USD and NZD USD, both of them are very similar. I would not be surprised if we saw moves to the downside this week, but the setups are not super ideal. We're going to have to see a push to the downside. We're going to have to see a close below last week's low, not last week's lows, but you guys can see Thursday's candle looks very, very, very similar to gold, right? We saw a push on Thursday, and then Friday we saw most of the gains come back, meaning, you know, a lot of people want to say that that's what you might call a fake out. Okay. Now, if we remove this fib level right here, and same thing as I showed you guys on Euro USD, if we just use the fib levels, 50% level is my favorite level. All right. And what did that actually have confluence with? This previous support. Let me delete this so you guys can see. And we have a blank chart. I'm actually going to go ahead and delete that because we're out of that area. We'll actually keep that there. But where we're looking at is this right here, guys. Boom. Oops. Let's change that to red real quick. All right. So if we stay above 73.27, then most likely this is going to be a bullish week for AUD USD. But don't take any trades on Sunday, guys. That's the worst mistake that new traders can make. Let the markets unwind. In basically, I say, like, do their thing, right? And unwind. Let the volume come back into the market. Sundays are very big trap days, okay? Because even though right now Sunday's candle looks very bullish, there's no reason why during London session it doesn't just drop lower and then end up closing lower, and then we have a whole momentum to the downside this week. That's what we could see happen, but I wouldn't be surprised if we saw something exactly like that happen. All right, so watch. This is a key level. This is a very, very key level because not only do we have the horizontal support and resistance, but we also have the 50% fib level. All right, and so this is the high of, let's see, is that the high of December? It is the high of December to the low of December, okay? So last month's high to last month's low fibbed out, and we have our rejection that we had on Thursday and Friday at the 50% level. So do not be surprised if this continues down further. And if you guys have been trading with me, you guys know I like to do a lot of confluence trading, or if you trade on your own and you're experienced, then you know that AUD USD and NZD USD pretty much move respectively over the greater term, okay? Same thing with NZD USD. Look at this 50% level, guys. Look at that right there. All right, rejection Thursday, rejection Friday. What do we have right here? Bearish engulfing candle on the daily. All right, and then we also have our waves. All right, so if you guys count waves, wave 1, 2, 3, 4, 5. Okay, and then now we can make our ABCDE pattern to move down even further, providing price wants to move lower. But one catalyst for this pair that a lot of people are looking at, technically speaking, is this formation right here. All right, let me show you guys something for any of you guys that are new to trading. You guys should definitely know candlesticks and candlestick formations like the back of your hand. The single, the double, and the triple. All of them. Earlier, you guys, I was talking about this on the evening star. The evening star, so if you guys didn't know what I was talking about, that's a 3 or a triple candle formation, bullish, doji, bearish. But what I'm talking about right here is this bearish engulfing. All right, bearish engulfing, and what kind of signal does it give us? Bearish, okay, to the downside. And why does it give us signal to the downside? Because it shows that Thursday, the buyers tried to come in and push price up, but Friday said, nope, this trend is very bearish. The bulls do not have control right now, so the sellers came in, they took price down, and that could be our catalyst to move price lower. So follow AUD USD with that, okay? USD JAPY. This is the pair I am looking at this week, guys. I think we will get a breakout this week. And when I say I think, that doesn't mean just take a trade right now. I am looking to take a trade definitely once this top is broken. I'd like to see another big push higher. All right, let me show you a couple things that I'm looking at. So let's start off on the weekly. Weekly is a great example, guys. SMAs, I don't have like a one size fits all lesson for how to use SMAs. It's something that you have to really, it's like learning Forex over like anything in Forex. You have to have experience. There's no one person, no one mentor, no one teacher that's just going to be able to just give you all the blueprints and you don't have to do any work, right? You have to put in the work and learn for yourself. And this is a very nice formation here, guys, when we're on the weekly, of course. So this is for higher time frame trading, but this can help us get positions for lower time frames. We had this big push through the SMAs. Now the sellers tried to come in the past couple of weeks and push price down, but you guys can see this trend is so bullish that the buyers said no way. And what did they create last week? A doji. Now that is not a bullish signal, but that's also not a bearish signal. But when you look at it cognitively and you understand what happened here, sellers tried to come in, or buyers tried to come in, sellers pushed it down, sellers tried to come in, buyers pushed price up. Sorry, I didn't point that out right. To the top and the bottom. That's where you get a long wick on the top and the bottom from, and then price actually ended up closing right around where the week started. That's how you form a doji. Now, that being said, we also are above the SMAs. You guys can see price actually came down last week to test the 100 SMA on the weekly, the W for the weekly. All right, that being said, I believe that this pair is just going to shoot up this week. That's my opinion, but I'm not looking to take a trade until our resistance right there, okay, is broken. Okay, so again, you can put an alert right there. You can click add alert. You can only set up 2 alerts with like a free account, but I have like their pro account, so you can do like as many as you want. But I mean, you guys can see it's already moving, but again, don't judge it based on what it's doing right now. Wait for on lower time frames like and then also on the 4-hour, guys, beautiful rejection at the 200 SMA. I always say real quickly, the best way to explain SMAs is they kind of act like when you put 2 magnets that have the same polarity to each other. They're both like you put a negative side and negative side to each other and they reject each other. They're kind of like, I call them opposite magnets. You guys can see last week price came down. Well, this part wasn't last week, but last week price came down and just pushed off the 200 SMA like a magnet, okay? Like 2 magnets with the same polarity. So that being said, I am looking for this resistance to be broken. I think this is probably the best setup this week out of everything. And then, of course, Euro USD once support breaks and USD chafe once resistance breaks. But look for something like this to happen. You want to look for a breakout. Look for it to come down and retest, maybe form like a exhaustion candle like this, something like that. All right, and then get a bullish engulfing candle, something like that. And then you're looking to buy just above that bullish engulfing candle, and then look for price to go higher. Aim for 100, 200 pips. This will be a trade that is definitely posted, especially if you're in the premium group. Now, this red line at 120. Oh, and then one last thing, guys, is if we look at, this is the 2015, these are multi-year highs, guys. So this is basically like the highest USD JAPI has pretty much, I think, ever been. Let's check. No, not ever been. Definitely not ever been. But in the past, like almost decade, that this price has been. So this is multi-year highs to multi-year lows fibbed out. So this is all of these levels are going to be very institutional, very strong levels of support and resistance. And what do we have as our last level right here? 61.8%. And what happened last week? We broke, and this didn't happen last week. We didn't break through it last week, but we did retest it last week. You guys see same thing as the pairs that were bullish and then the bears came in. We had the bears come in on Thursday to push price down. That's a trick. All these sellers, all these people we took a sell too. We took a small loss on USD JAPI last week on a sell. Sometimes the markets do that. We take losses. Everybody takes losses. That's part of the game. But now we can see that this was definitely a fake out move to entice sellers. And then because Friday we had price come back. And what's really interesting is even though NFP was actually bad, technically bad, it was worse than last month for the US dollar. A lot of people were wondering why didn't the US dollar drop on a weak NFP? If you look at the grand spectrum of NFP and you understand what it measures, like the unemployment rate and how many jobs are being added to the US and different factors like that, even though the unemployment rate went up 0.1%, we're still at historically low unemployment rates in the US. So we're still very good. The economy, it's still showing signs of growth and strength in the US dollar. And that's why I think this pair is definitely going to push up. And then, of course, you know, the yen is also treated as a safe haven currency, similar to gold. So when there's a sell-off on gold, there's a sell-off on the yen as well. So I am expecting this pair to move higher. This is a great trade. Let me just hit up the chat for a second, guys. Oh, okay. Just a lot of people saying yes. Thank you guys for that feedback when I came back. Again, I don't know what happened. USD CAD is coming up to a very, very important trend line, guys. It's coming back to a multi-year trend line. Now, I know I said in the beginning I don't use trend lines a whole lot. I only use trend lines really on higher time frames and when they make sense. When I say I don't use trend lines, I don't draw trend lines on like the 15-minute time frame or the 1 hour time frame or anything like that. I'm really looking for higher time frame trend lines that make a whole lot of sense. Now we also have our 2016 high, okay, from the January 2016, almost a year ago, and the 2016 low from back in April fibbed out, and we actually have a double top that formed at, again, the 50% level. You guys can see, you kind of can start to see why the 50% level is my favorite level, is because it gets respected so much. So same thing, 50% level. We were looking to buy this breakout. The breakout never happened. Now we're coming back down to this trend line. So we're going to have to see what happens in this area. But guys, this can be a huge, huge, huge opportunity for you. You can literally make thousands upon thousands upon thousands of dollars on just this pair alone if we were to break support. If we break support, guys, expect this pair to drop super, super, super hard. But that being said, if the dollar is going to continue gaining strength, then we could see a rejection in this area and price could continue moving up. USD CAD is known for it's really like a tricky pair to trade if you guys don't trade USD CAD that often. So we are not going to take a trade right now just because it looks like it could go to the downside. We want to see where today's daily candle closes. Now, if we want to come back up, then we're going to be aiming, if price pushes above this, which is I believe the 38.2% level. Yep, 38.2% level right here, this purple line that it's near. Then we will look if it can break above here and this 100 SMA, then we will definitely look for a buying opportunity back up to the 50% level. So this pair can offer some great opportunities this week as well. It's either going to go just like most pairs, guys, it's going to go it's either going to go up or down. I know that sounds like cliche and kind of vague, but we're looking for confirmation to know if it's going up or down. Okay, if price can respect this 100 SMA and it can continue down further, then we're going to be looking to sell on a break of this support trend line. If it can't and buyers still want to stay in control on this long-term uptrend that we're on, then we will definitely look to buy. All right, so USD JAPY, USD CAD, two great setups for this week. Oil. Oil's kind of interesting. Again, remember, I haven't been trading oil. I don't give out signals on oil, just something that I look at. It's really stuck in this tight range at the top. All right, it's not doing a whole lot. Now, if oil, again, remember, if oil goes up, USD CAD is going to go down. This is both a long-term correlation. All right, so this could be, if we see this spike up, this could be the catalyst for USD CAD to continue dropping, even if the dollar gains strength. Okay, USD CAD can still go down if the dollar gains strength because the Canadian dollar can be having such an impact on that pair. All right, we have something in the chat. Yeah, I can go back to gold real quick, no problem. And then guys, I threw Bitcoin on here. This is the first week I've ever put Bitcoin on here. I'm not recommending any trades. I just simply have it on here because I was looking at it. Very crazy. It's been making some huge rallies. I don't actively spot trade Bitcoin. I have a couple like actual Bitcoins in my Coinbase, but other than that, it's just something I wanted to look at. So just ignore that this is even on here. I don't give out trades for cryptocurrencies. I'm kind of getting into it, kind of learning how to spot trade it, but it's such a volatile instrument. You have to be very, very careful with it. But I wouldn't be surprised if Bitcoin went up back over 1,000. Okay. So hold on, guys. We got a couple questions. First, let me go back to gold for info. You asked gold. Gold info, I was saying I'm not interested in trading this pair unless the top is broken, okay? Unless resistance is broken, then we'll look to continue buying probably up to the 1,200 level. But, this pair, I would not be surprised if it continue moving lower. It's still, even though we have this push right here, guys, the long-term trend is still down. All right. And if we could actually fib this out real quick, guys, if you guys fib, this is from the elections. Okay. This is the elections, US elections high to US elections low. All right. We're seeing some resistance right here at the 23.6% level. This is the previous swing high to swing low. All right. If you guys don't know how to fib out, you're always looking for a swing high to a swing low. And I just usually look for the last previous kind of like quote unquote trend, right? You guys see this is kind of like a little downtrend. This was a little uptrend, downtrend, now small uptrend, right? So this is kind of like the last trend that we were in, because currently we're in a small uptrend. If that makes sense. If you guys don't understand Fibonacci levels, just Baby Pips has a great course on it. It teaches you exactly how to draw fib levels. And then from there, if you want more advanced training, I recommend the book, The Naked Forex. If you guys have not read Naked Forex, there is a free copy in our Dropbox. Okay, so you guys can message me. I'll give you guys the link, or I'll post it in Telegram after this for you guys. But that's gold. Can you show the points where you put the Fibonacci on USD CAD? I sure can. Yes. So on the daily, I have it zoomed out. Okay, this is from the high on, looks like the 20th of January, 2016. Okay. And then looks like May 3rd of 2016. So on your chart, just zoom out, and it's going to be the high from last year to the low of last year. Okay. Fibbed out just like this. Always pull left to right. Okay, you guys ever notice when I fib out, I never go like this, right? I never go like that. I never go from right to left. You always pull left to right, and the reason that makes sense is because you're measuring what percentage of this initial move is being retraced, right? It wouldn't make sense if 100% was down here and 0% was up here. It only makes sense if 100% is up here, because if price were to come up to here, then that means 100% of this move would be retraced. All right, so now we're at the 50% level, and then this support trend line pulls all the way back to the Julys of 2014. All right, so watch this trend line very carefully. I wouldn't be surprised if we saw a buy out of this, but if oil wants to continue going up, then this will probably break that. Matome, you're saying CAD Jappy. Unfortunately, man, I don't mean to be of no help, but I am a trader that I prefer sticking to like a certain amount of pairs. Like my opinion, guys, just like a little side note, my opinion is when you're learning trading, find one or two pairs and stick to those pairs and really learn them like a language, like basically like get to the point where you can go like a day or 12 hours or 16 hours without looking at the chart. And you pretty much already know what direction price is going to go because you've been studying the price action on that pair for weeks and weeks and weeks. I think one of my first pairs that I learned like the back of my hand was NZD USD, New Zealand dollar, US dollar, and then Euro USD. And then slowly I just started gaining more. And then eventually you start to learn correlation. You learn, okay, if this pair does this, it looks like this pair is going to do this. I love correlation trading. It's a great tool to use. That's my little tidbit. But above and beyond everything, guys, the best way that you guys are going to improve your trading is exposure. And I don't mean just exposure, just putting in a trade on a demo account and then hoping it goes in your favor. I mean actually studying, guys. Get yourself a trading journal. Go down to Walgreens and pick up go to the dollar store, pick up a trading journal and a pencil, pen or whatever. And when you guys are watching these webinars, right, go through, and I'm talking about these pairs, right? I know I talk really fast, but all of these are recorded. So you can always go back to them and just write down what I'm doing, and you guys will start to eventually follow along and start to kind of build your own strategy, and then things will make sense. You'll start to be like, oh, okay, I see why he's doing that now because he did this last week or he did this a couple months ago, and things will start to make sense. But you guys, I know trading is very, very confusing and overwhelming, and it seems like a complete different language in the very beginning, and that's how it should be, okay? Because if trading was easy, everybody would do it. Schools would be teaching people how to trade currencies, and then everybody would be a trader, and there'd be no such thing as normal jobs because this thing would be super easy. And so that's why it's not easy, is because it takes time to master, right? Just think if you walked into a doctor's office right now and a guy's about to do brain surgery, right? He just hands over the tools to you and says, don't kill this patient, right? What are you going to do? You're going to start to freak out. You're going to be all overwhelmed. And that's how it should be, because you don't know anything yet. You don't have any exposure, right? So what do? You go to school for 4 or 6 years, whatever, become a doctor, brain surgeon, 10 years sometimes. The beautiful thing about Forex, guys, is you don't have to do it for 4 years to become a master. You don't have to do it for 6 years to become a master. You can really discipline yourself for 24 months, 1 to 2 years, you can become a full-time trader. But the thing is people just jump into trading and they want to like jump into live money. They get enticed by all these people that are making money. They see all these people flashing cash and nice cars on social media, and they think they can do it overnight. And then they end up blowing their account, and then they don't have any money, and then they think it's like a scam or whatever, and then they end up out of the market, and then you're a part of the 95% or 90% that don't profit from Forex. So the key is discipline, guys. Self-control when you're in trades. Don't be risking all your money, because there's always going to be losing trades. That's kind of what clicked in my brain a long time ago, was that I eventually realized it's not about winning every single trade and going hard on every single trade. It's about the risk management over a long period of time, and understanding that you can actually be profitable and make a full-time income, and you only have to be profitable half the time. You guys can literally win only 50% of your trades and become self-sustainable on Forex. It's no joke, guys. It all breaks down to the way you manage your money. All right. So if you guys have any questions, please feel free to reach out to me. If you guys like what you heard, this is all recorded. If you want to go back to it, we throw it on our YouTube in about an hour to 2 hours. It just has to render and upload. Just go onto YouTube, type in Positive Traders, where you'll see my channel right on there, and then from there you guys can follow along. But stay tuned, guys. We're hitting this week very hard. This is going to kind of like our official start of 2017 now that the volume is back in the market. I'm very, very excited. But guys, remember, it all breaks down to risk management. You guys want the secret to Forex? It's risk management. It's risk management and self-control, right? You can't manage your risks properly if you don't have self-control. So it all breaks down to you inside saying, all right, I'm not going to risk 50% of my account on this trade. I'm going to risk 2%. And then if it ends up being a profitable trade, I'm going to compound this trade, right? Or I'm going to take that 2% and move on to the next trade. And then you're looking for trades to compound. That's one thing I teach you guys in the premium group all the time, is compounding your trades. And that's how you become profitable, winning only 50% of your trades. When you have a winning trade, don't close it early. Just never look at the money. Never look at the money, guys. Always be focusing on the tips and the process of making the money. All right. So that's my little spiel for the day, guys. I appreciate each and every one of you guys. I'm so excited for this week. You guys are going to see me on Facebook Live this week. You guys are going to see me on Periscope this week. Like I said, if you're in the premium group, you're going to get at least 10 or more signals this week. If you're in the free group, expect at least 2 signals. And if you guys want to learn some more information about us or what we do, go to either our Facebook group. Just go to Facebook, type in Positive Traders. We have a page and a group. The group is a little bit more active. Or go to our website, which is www.positivetraders.us. You can send us an email on there. You can hit me up on Facebook. You can hit me up on Telegram. If you're a premium member, you have any questions about what we went over today, you can hit me up on Slack. But other than that, guys, I hope you guys all have an awesome week. Remember, risk management, stay profitable, keep those pips, don't risk your whole account on each trade, and let's kill this week, guys. But I appreciate all of you guys, and you guys have an awesome, awesome week. I'll talk to you guys all later.